Hey traders, welcome back to this week's weekly Forex forecast. We are going in not just to a new week, but of course a brand new trading year, and I'm very much looking forward to it. This does wrap up the second year at GMT. It's been a second consecutive profitable year in the members area with the setups that we send out to members throughout the year. We've currently sent out 672 setups with a win rate of just under 76%. And we're sitting just under all-time highs on those setups in the members area. So coming into the new year, if this is something you think that would help with your trading, to see this done in real time and to get the setups that I'm looking at and trading in Forex in real time as well, feel free to join us in the members area. All the information is in the description and the pinned comment below. But coming into the new year, the number one standout theme in the Forex markets is the US dollar. US dollar to the long side is the number one thing I'm going to be focusing on next week. And primarily, we're seeing weakness in those commodity currencies still, like the Aussie and the New Zealand. And as risk off starts to come into stock markets and we see stock markets heading lower, this is going to benefit some of those more risk off currencies like the dollar, like the Swiss franc, again, which we'll be looking at in today's video. Okay, so if we look at the portfolio selection, you can see I've listed these from performance down instead of ranking down, as we often look at in the videos. And I just think this sets up nicely going into next week. The US dollar is still, although we're getting a bit of weakness over that Christmas period, we're starting to see the weakness out of the New Zealand dollar kind of dissipate, and the Aussie, we're starting to see some of that strength dissipate over the Christmas period with the US dollar. I'm just looking at this really just as a lack of volatility over the holiday period. So I want to really look at the performance metrics outright, and the US dollar is sitting at the number one spot. We're going to be looking at US dollar long plays as my favorite theme heading into next week. The Swiss franc sits at number 2, and after that, to the long side, we can look at the euro or the pound. Because the pound is going this way and the euro is going this way, and we're starting to see stock markets selling off. I think we've got more downside in the S&P, and as that happens, you tend to see the euro outperforming the pound. For those two reasons, I'm going to be looking at euro longs as the third currency option in today's video. Now, to the downside, what are we looking to go long versus? Well, the New Zealand dollar is the number one short we're going to be looking at. We're going to be looking at Aussie dollar to the downside. And as we start to see the US dollar strengthening, especially as the US dollar is strengthening because we're getting bond yields going higher because of fears of inflation, this is seeing outflows from the Japanese yen. When you get a crash in stocks, you tend to see money coming into the Japanese yen and the US dollar. When you start to see bond yields going up with fears of inflation, the dollar goes up, but money tends to come out of the yen, and you don't have that same kind of safe haven status until you get something kind of violently break, and then money comes back into the yen. So for that reason, I am going to be looking as well at Japanese yen short. So we're going to be looking at in today's video New Zealand dollar to the downside, Aussie dollars to the downside. We'll look at US dollar yen to the upside. We'll also look at euro dollar because we look at euro dollar every single week. And also we're going to be looking at New Zealand franc to the downside, Aussie franc to the downside, franc yen to the upside. And finally, we will look at Euro New Zealand to the upside, Euro Aussie to the upside, both of which of course should benefit from risk off. So as stock markets come down, you tend to see money coming out of the commodity currencies into primarily the safe haven assets, the US dollar and Swiss franc. But then after that, it goes into the EU majors like Euro, the pound, over and above the New Zealand, the Aussie, and even the CAD. So we'll also look finally at Euro Yen to the upside as well heading into next week. Those are the setups that I'm going to be focused on primarily, and those are the setups we're going to be looking at in today's video. Okay, so kicking off the watch list as always with crude oil. And what's interesting about crude oil is that it's really just been going sideways, but look at the number of times that crude oil has tried to take out the prior low and bounced and bounced and bounced. If this thing breaks, it can break pretty strongly with some real momentum. So what I would really like to do is I would really on balance like to trade crude oil from the lower bound or trade it to the upside, because the problem with shorting crude oil here is it's attempted to make a new low so many times that when it starts to finally go, it could go pretty strongly. And you may, end up, if you're shorting this, you may be on the wrong side of a bigger move. So crude oil is not my favorite setup going into next week, but we do look at it every single week. What I would like to see then in crude oil, if we just zoom in on this a bit, is the following. We would like primarily next week to see crude oil coming down, taking out the lower bound at the 67.92. Once we breach this, and of course, here is the probable range for the week with roughly a 7 out of 10 expectancy. And here is the second probable range for the week with roughly a 9 out of 10 expectancy. So what this means is essentially think of it like this. For those of you who are new to these videos, if you trade above the blue level, you're overbought during the week. If you trade below it, you're oversold. If you trade above the gold level, you're extremely overbought during the week. And if you trade below it, you're extremely oversold. So if we trade below the 67.92, we become oversold next week. This is entering into the buy zone between these two levels. This is where I'll drop down onto lower time frames and start to look for those reversal patterns. I always look for very simple stuff. Bullish reversal patterns are just inverse head and shoulders, double bottoms primarily, mainly just those two. That is the 1 or 2 day liquidation I'll be looking for back inside this range next week. If we come all the way down to the 65.58, I may already be long over in this area. And if it moves against me and it's a losing trade, once we breach the 65.58, we become extremely oversold during the week. This is the second place I'll be looking for a 1 or 2 day reversal, whether I'm long already and just cost averaging it, or if you're not already long, these are fantastic initial positions. You know, if you take out these gold levels and you're not already in a trade, these are very, very high probability reversal points. So those are the two things I'll be primarily looking for. The third thing you can look for is if you start to see a breakout intra-week with momentum. We haven't got it here. I mean, look at how we break above the moving average, but it's kind of choppy. It's kind of choppy. Pulls back, you know, it's kind of choppy. What you want to see is you want to see it consolidating and then breaking with real momentum. I mean, it should pretty much get halfway towards this level, you know, ideally. Should get quite close to it. And then on the pullback, you know, that is where the moving average follows it, and that gives you your bull flag setup during the week. So those are the three setups I would be focusing on, primarily down below these levels here. And I'm only looking to be a buyer of crude oil next week. I'm not looking to short this market. So I cannot short crude oil next week. It would only be if I am going to get involved in this, one of these three. But I do think there are better opportunities in the Forex markets over and above crude oil next week. Okay, so kicking off with the US dollar pairs, which is my favorite theme going into next week, that US dollar long theme, starting with New Zealand dollar. Now, we don't actually have any real major news events coming out next week. It is a bank holiday on the Wednesday. Just bear that in mind. But we do not have any major news that we need to pay attention to for short-term trading. This is why I haven't discussed any of it coming into next week. So what I like about New Zealand dollar is I like that we've gone into this correction with this big momentum. Very often you get this momentum. Momentum precedes price, should be continuing lower. What I'll be looking for primarily next week is if we can pull back, we can correct into and above the 0.57160. This is where we turn overbought during the week. And this is where I'll be dropping down onto lower time frames to look for those 1 or 2 day reversals back inside the range. And that's the primary setup. I mean, that is really what we're trading day in and day out with GMT members. When I was talking about 672 setups posted, these are the exact setups that we're doing in real time. So everything we discuss in the YouTube videos on the Saturday or on the weekend, these are the setups we're looking at during the week. So if we can breach 0.57160, this is going to be the area I'm going to start to look for shorts. If we blast through this, and I may already be short here and the trade starts to not work, once we take out the 0.5799, we become extremely overbought during the week. You're usually not going to hit these levels unless you've got some catalyst. You know, these levels are completely normal to hit during the week. The gold levels are not normal, they're abnormal. If you hit those levels, something big has happened, and usually there's some kind of major reversal, and usually that only comes with a catalyst. You know, FOMC, interest rate decision, you know, or an unexpected catalyst. So I don't expect it to take out the 0.5799, but if it does, that would be the second place I'd be looking to cost average a losing position or an initial position. And the third and final thing is we get this big kind of bear flag setting up, look for the break back above the moving average, starts to make its way back to the blue level, and then instead of testing it, you get momentum back in the direction of the trend. The moving average follows it, and this would be, you know, just like a trend kind of channel breakout, many people would discuss it as, but simply it's just a pullback into the moving average, and that would set up your bear flag down to the 0.5549. Next is Aussie dollar. Again, we've got this big momentum from FOMC. Remember, we had the FOMC pal came out and he was pretty hawkish. This actually topped stock markets, and at the same time we saw a big rally in the dollar, and we've just been consolidating since then. So I can only be short this or do nothing. Buying this is not an option. I would like to see it trade above the 0.6311 next week, enter the sell zone over here. This is where, between these two levels, I'll be dropping down and looking for those reversal patterns, double top, head and shoulders for a 1 or 2 day liquidation back inside the range. The second thing is if we blast through, as unexpected as it is, and we take out the 0.6404, we become extremely overbought during the week, And whether I'm short already from over here or not, this is the second place above this level. I'll be looking for a potential short opportunity, looking for those bearish reversal patterns. And the third and final thing is that intra-week setup where you start to move towards the upper bound and then you break back in the direction of the trend with momentum. The moving average follows it. You get the pullback into the moving average and the move away, and you get that nice bear flag setup. You don't always get it, but it's a setup to look out for because very often you do get one, sometimes two, but primarily one of these in the 4-hour time frame during the week in trending markets. So the profit taking area would be down below the 0.61248 next week for any intra-week shorts in Aussie dollar. Next is US dollar yen. I can either be long or do nothing. Now remember, we also had the BOJ. We didn't just have the FOMC. FOMC came out. Powell was hawkish. This boosted the US dollar, but at the same time, the last meeting, some people were expecting a rate hike by the BOJ, and it didn't come, didn't materialize. They kind of pushed it back even further. It's one of the reasons why we've seen such a big move into the dollar, but the yen is suffering because of this coming into January and February. So any pullback in US dollar Japanese yen, which sees the market trading below the 155.64 next week, this is where we enter the buy zone in a market that I'm only looking to be long. So I can't short this market at all. So I wouldn't be shorting it in this zone. I'd only be looking to buy it. So if we drop down below this level, I'm going to go down to lower time frames, look for those bullish reversal patterns. And that usually generates a 1 or 2 day liquidation back inside the range during the week. The second thing I'll be looking for is if we blast through here, although I don't expect this to happen, if we do take out the 153.45, whether I'm already long with a position around here or not, this would be the second place next week. I'll be looking for a 1 or 2 day reversal. And again, third thing you can look for, if you like, is that bull flag setup where you break with momentum. It's clear like this. This is clear. Breaks, pulls back into the moving average, moves away. Pulls back, the moving average tracks it back up. And then often, again, you only get one of those in the 4 hours within a week next week. The profit taking target is the 160.02. Starts to trade above there next week. You start to run out of steam. And that's a great place for booking any profits on any intra-week longs in US dollar yen next week. And finally, we have euro dollar here, looking at the dollar pairs before we move on to the Swiss franc pairs. Now, euro dollar isn't one of my favorite markets heading into next week. We cover it every week like crude oil. And the reason is because both the euro and the dollar are actually benefiting from this kind of risk off that we're seeing in the stock market. So on balance, I'm actually looking to be long both the US dollar and the euro next week, versus the Aussie and New Zealand. But if you put them together, I do think we should still be having a bearish to neutral bias on euro dollar. So out of the two options of being long or being short, I can only be short euro dollar. I cannot buy euro dollar next week. What I want to see is euro dollar pushing above the upper bound, entering into the sell zone between these two levels next week. If we take out the 1.0539, this is where I'm going to drop down to lower time frames and start to look for those bearish reversal patterns for 1 or 2 days down. If we blast all the way through, not expected to happen, but if it does happen, the 1.0652 is where we become extremely overbought intra-week. And again, if I'm already short, I'll be looking to cost average it and scratch it for break even as it pulls back. Do that all the time with members in real time throughout the week. And if I'm not already short and it takes this out, that would be a great initial position for 1 or 2 days down. The third or final thing you can look for is that intra-week breakout. So it attempts to make its way back and then it fails. And again, if you were to put a trend line on it, it'd probably look something like this. Breaks out of the trend line, the moving average follows it. You get that kind of pullback into the moving average, and then a sell-off into the lower bound, the profit-taking target to the downside next week in euro dollar at the 1.03126. Okay, so moving on to the Swiss franc pairs, starting with New Zealand franc. Again, we have really nice momentum to the downside. I can either be short this market or do nothing. Cannot buy this market next week for me personally. What I want to see is this pulling back, breaching the 0.5145. This is where we become overbought during the week. This is where we enter this sell zone between these two levels. This is where the odds really swing in our favor for a 1 or 2 day reversal out of 5. So out of 5 trading days, really I'm looking to capture 1 or 2 days worth of reversal out of any of these markets. So if we breach 0.5145, this is where I'm going to be dropping down, looking for bearish reversal patterns on lower time frames, 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, etc. If we can blast through here, which is unexpected. But if we can do that next week, it's not going to be ideal because it means I'll probably already be short from somewhere here. I'm risk managing a losing position. Usually I am if we hit these gold levels. But if we take out the 0.5211, this is the second place. Whether I'm short already or not, I'll be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing, again, look for this market to make its way back, and then you may just get the breakout. You know, you have this kind of channel. People like to draw channels on like this. I'm not a big fan of them, but you could see it doing this, and then it breaks back down below the moving average. Moving average follows it. You get that kind of pullback into the moving average, and then a move away into the profit taking zone next week is below the 0.5013. Next is Aussie franc. Again, I can either short it or do nothing. Buying this market's not an option. The sell zone is above the 0.5684. Once we breach this, this is where the odds turn in our favor for a reversal back inside this range. What I like about this is we do have some really nice key area of resistance up here. 1 high, 2 high, 3 highs. And if we push into this kind of sell zone, as I like to term it, between these levels, and we hit these highs, these are some of the best setups that I look for when we basically get into the sell zone and then we hit a resistance area, or we're looking to buy in a strong market, we enter the buy zone and we hit, you know, a prior kind of support area. Those are some of the best setups and they offer the best opportunities for reversal. So if we do breach this, especially if we take out these highs, this is where I'm going to be looking on lower time frames for those reversal patterns to the downside, or 1 or 2 day liquidation back inside the range. If we blast through, as unexpected as it is, and we trade above the 0.5761, that is where we become extremely oversold during the week. Whether I'm short already or not, that'll be the second place. I'll be looking for a 1 or 2 day reversal. And the third and final thing is, it may just chop like this and then break down. Moving average follows it, and you can look for that bear flag setup. That first move back into the moving average and the push away, that tends to be the better setup that you get during the week. Down to the 0.55306 in this case, great profit taking zone down here below that level. And the final franc pair is franc yen. What I like about this is we have a stair step where we had this consolidation, then we break with momentum on FOMC. So if we pull back and we breach, in this case, the 172.74, we start to trade below the bottom of this range. This is actually going to be, you know, a stair step pattern at the same time, where you break out of a consolidation, you pull back, you retest the high, and then you start to bounce like this. So if we get that, this is going to be a great place below the 172.74 to start to look for those 1 or 2 day reversals. If we blast all the way down, kind of as a backup plan more than anything, because we don't expect these levels to be hit, but if we do take this level out, below the 170.47 is where I will get a second shot at pulling the trigger to the upside for a 1 or 2 day reversal if we did come down here. And the third and final thing is, look, it's already consolidating. You know, we could very easily see this just chopping around the moving average, and then it breaks out of this consolidation with momentum. Moving average follows it, and you can look for that bull flag set up into the nice profit taking zone above the 177.28 in franc yen next week. Okay, so wrapping up the Forex universe then with the Euro pairs, starting with Euro New Zealand. This is a market we're trending nicely to the upside in the 4 hours. I can only be a buyer next week, cannot be a seller of this market. What I want to see is Euro New Zealand coming down, taking out the 1.8305. Once we start to trade below the lower bound of this range, this is where I'm going to be stepping in, looking for a 1 or 2 day reversal to the upside. If for whatever reason, although it's not expected, we trade below the 1.8103, the second place, I'll be looking for a 1 or 2 day reversal, whether I'm already long from over here or not. And third and final thing, as always, you can look for it to break below the moving average. Then it starts to consolidate, and then you get the break back above the moving average. The moving average follows it, and you get that bull flag set up, pulls back into it, moves away into the profit taking target next week above the 1.8709 in Euro New Zealand. Next is Euro Aussie. Again, I can either be long or do nothing. I cannot sell this market next week. I personally want to see this pulling back, breaching the 1.6581. We've got a really nice high over here. We tried to break it, then we did break it. We actually came back. Looks like we retested. This, if you draw this all the way across, is a really nice area next week to start to look for a 1 or 2 day reversal to the upside in Euro Aussie. If we break down and we trade below the 1.6395, this would be the second place I'd be looking, because we become extremely oversold during the week. Something would have happened. You'd have to have some kind of catalyst to do this. But if this does happen unexpectedly, this would be the second place I'd be looking for a 1 or 2 day reversal higher. And the third and final thing is look for the consolidation during the week where it breaks below the moving average and then you get the break back above. The moving average follows it, and that first pullback where it hugs the moving average, that's where you can look for that bull flag setup into the profit taking target of the 1.6952. And last but not least, we have Euro Yen. Again, I can only buy this market or do nothing. I cannot sell this market. I would like to see Euro Yen coming down into the buy zone, breaching the 162.14. And also we can stair step this prior high. So we break out, pull back, test it, and then we start to bounce. So below the 162.14 is where I'll start to look for bullish reversal patterns if we can trade down below here next week for a 1 or 2 day reversal back inside the range. If as a backup plan, we trade through this and we take out the 159.75, and there's a nice low here as well. This would be the second place. I'd be dropping down below this level to look for a bullish reversal pattern for a 1 or 2 day reversal to the upside, whether I'm long already from down here or not. And the third and final thing, again, look for that intra-week consolidation. It breaks below the moving average, attempts to come down to the 162, but instead you get momentum back in the direction of the trend that we're looking at. This would be the second place that I'll be looking for a potential 1 or 2 day move into the upper bound. Usually you get a 1 or 2 day move into the upper bound, or you get a 1 or 2 day reversal from below these levels. Okay, so wrapping up the video with gold and silver as we always do, and because I have a bullish bias in the dollar, I am looking at this as a headwind for both gold and silver, so I favor short positions next week in both gold and silver. What I want to see then is I want to see gold coming up. If I'm looking to be short, I want to see it come up primarily and become overbought during the week. So above the 2670.80, this is where I'll be dropping down onto lower time frames, looking for a 1 or 2 day reversal back inside the range. The extremely overbought level is at the 2719.70, and if we breach this, you can see there's 2 prior highs over here as well. So very, very good chance next week if we breach the 2719.70 that we do get a 1 or 2 day reversal back inside the bigger range, although it's unlikely that we take out this level. So very good chance we take out these levels, not likely we take out these levels. But if we do, we get a higher chance of a reversal. So the third and final thing you can look for next week is we're already above the moving average. Look for it to continue and then break down with momentum. Again, you could draw your trend line on here if you wanted to. I don't really like trend lines because moving averages actually are better. They're almost like dynamic trend lines in a way. But if it pulls back into the moving average like this, that's your bear flag set up down to the 2572.99. That is where we enter the profit taking zone next week for any shorts in gold. And finally, we have silver. Now, I prefer silver shorts to gold shorts. So if we get the opportunity in gold and silver, I'd prefer to trade silver. But both of them, I'm only really looking for bearish reversal patterns or short opportunities. What I like to see in silver is a continued pullback and a breach of the 30.35. This is where we enter the sell zone next week. And this is where, we have a high over here, have another high over here. This is where I'd be dropping down, looking to see if we could take out these highs, and I'll be looking for bearish reversal patterns for a 1 or 2 day reversal back inside this range next week in silver. If we blast through and take out the 31.33, and sometimes, again, I'll short it and then it will just start to push against me. We take out the 31.33. This is the second place. I'll be looking for a short opportunity to the downside for 1 or 2 days, whether I'm already short here or not. And the third and final thing you can look for is if you start to break back above the moving average and then you break down with momentum, look for the moving average to follow. The market pulls back, hugs the moving average, hugs the moving average, hugs the moving average, moves away. You can look for that bear flag set up down to profit taking target next week is a 28.40. And with that, we close out another trading year. 2024 comes to an end. I want to thank everybody who's been following along with the videos, who subscribed to the channel, everybody who comments on a regular basis. I appreciate all of you, and you guys really make it worthwhile doing these videos at the weekend. I want to thank everybody who signed up to GMT, and I'll do my best in the new year to have an even better trading year next year with all of the members. And aside from that, I want to wish every single one of you a very happy New Year's, and I will see you all on the other side. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.